Usury is the practice of lending money to borrowers at exorbitant interest rates. This predatory lending tactic is against the law as it forces home buyers into paying high interest rates on loans. Because usury and its practice affect individuals looking to borrow money for mortgages, it is an essential part of the real estate exam. Hello everybody, Zach here from realestatelicensewizard.com. Today we're talking about usury. Let's get started. So what is usury? Well, usury is the act of lending money at unreasonably high interest rates. This illegal practice is an example of predatory lending, as it makes it difficult for home buyers to pay off their loans, causes high consumer debt levels, allows lenders to make money from paying on consumers. Typically, predatory lenders charge high interest rates to borrowers with less access to traditional financing options. This includes borrowers with maybe low credit scores, a history of defaulting on debts, a history of mortgage foreclosure, or maybe even repossession of financed property. Because these borrowers have poor credit, many banks and lending institutions refuse to provide them with home loans. This leaves borrowers with no other option than to seek out private lenders with high interest rates. An interest rate is the amount it will cost a borrower to take out a loan. These rates are a percentage of the total loan amount. Interest rates vary from state to state and can change depending on certain economic factors. However, most homebuyers take out fixed rate mortgages to ensure their rates stay the same over time. What is a maximum interest rate? Well, a maximum interest rate is the highest amount a lender can legally charge for a loan. Private lenders who charge above the maximum interest rate for their state violate usury laws. So why do we have usury laws? Well, usury laws protect homebuyers from taking out home loans with exorbitant interest rates. States each have their own usury laws that set a maximum interest rate for lenders to follow. These laws prohibit predatory lending practices and ensure that home buyers pay interest at reasonable rates. State usury laws vary, so real estate professionals need to be familiar with a maximum interest rate for their state. And don't worry, we do have an article on our website that outlines every maximum interest rate for usury state by state. So make sure to check that out after this video. Now it's worth noting that not every type of loan applies to usury laws. For example, credit cards have extremely high interest rates. It's technically a loan. You're loaning money when you're using a credit card, but they are not subject to usury laws. So just keep that in mind. Now, what is an example of usury in real estate? Well, let's talk about one. So let's imagine Sally is a first-time home buyer with a low credit score. Because of her credit history, she does not qualify for home loans from most banks and mortgage companies. Because she has limited options, Sally decides to take out a loan from a private lender instead. This lender agrees to loan Sally the money, but charges an interest rate of 20%. However, the state Sally lives in has a maximum legal interest rate of 6%. In this case, the lender has violated the law by lending money with rates beyond state usury limits. Payday loans are the most notorious for lending money at exorbitant interest rates. A payday lender lends money to borrowers on the agreement that the loan will be repaid when the borrower gets their next paycheck. According to the New York Times, Attorney General Eric T. Schneiderman sued multiple payday companies for violating usury law in 2013. These payday lenders were running their businesses online and charging New Yorkers interest rates as high of 355%. According to New York usury law, the maximum legal interest rate for documented loans is 16%, so clearly they were doing something wrong. Schneiderman alleged that these lenders were taking advantage of desperate borrowers and violating state usury law. In 2014, Schneiderman and the payday lenders reached a settlement. The predatory companies were ordered to stop charging interest rates on loans and give refunds to their borrowers. So who then enforces usury laws? Well, usury is enforced by state usury laws. So private lenders who charge usurious interest rates are typically punished by those state-specific governments. Now, obviously, a lawyer or a law professional needs to come into play to handle that, but the enforcement of it is handled by the state. There is no national limit or no national usury law. So penalties for breaking usury laws obviously vary from state to state, but in most cases, the lender must return all interest to the creditor and pay additional fines. Violators may also have to spend time in jail in severe cases. Now, there are some criticism of usury laws. Some critics say that imposing maximum interest rates on lenders actually harms borrowers. They argue that an interest rate ceiling restricts credit flow to inexperienced borrowers seeking first-time mortgage loans. Critics also say that usury laws decrease profitability, which distorts the entire financial market. Of course, supporters of usury laws would argue that these critics are acting out of self-interest and looking to prey on consumers. So what do you need to know for the real estate exam? Well, you need to be familiar with the term usury. Usury is an illegal practice that scams home buyers into paying higher interest rates on mortgage loans. Because usury laws vary from state to state, it's essential as a real estate professional that you're aware of your state-specific usury laws. We have an article, as I mentioned earlier, on our website that outlines every single state-by-state usury maximum interest rate law. So definitely check that out. I'll leave a link down below for that in the comments and along with the description. For more videos on fair housing and fair lending, click here and click here to subscribe. Thank you guys so much for watching. Until next time, see ya. Bye-bye.